On Business Incorporated today, Zimbabwe civil servants to get 100% salary increase. And in Nigeria, e-Naira transactions increased by 63%. British international investments commit 20 million euro to project in Sub-Saharan Africa. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Well, as always, we start off with the market here in Africa. Looking at the numbers, we see it's a good day, at least for Nigeria, even though it's marginal. It's 0.05% up at intraday at 54%, 932.68. For South Africa, it's almost 1% up, 0.91% at 74,797.06. Even though we've seen South Africa doing much better than this before, we saw it at 80,000 some time ago. We look at other parts on the continent. Egypt is in the red, 0.27%. Kenya seems to be recovering from some of those losses it had a couple of weeks ago. It's closed on Tuesday, 2.68% in the green. Well, we move over to the Middle East now to see what's happening in the market there. It's mixed sentiment or more about positive. Abu Dhabi in the green, 0.29%. Dubai also in the green, 0.33%. And looking at other region right there, we see that it's also in the green at intraday. Abu Dhabi, 0.29%, Dubai, 0.33%, and Qatar also more than 1% in the positive. Saudi Arabia also positive at 0.32%. Let's look at Nigeria market now, give a little bit of background or updates on the NGX and what's going on there. Joining us for that is Richard Akimoladun, joining us to give us what's going on at the markets at the NGX. Hi, Richard, good afternoon.
Good afternoon, Ini.
Yeah, so we see the market is marginally up at intraday, 0.05%. Which ones of the stocks are catching the attention of investors at this time?
Okay, as I've mentioned, the market is up. I think the market has added another 2 basis points, up now by 8 basis points. The market is riding on the back of little gain that we have seen in First Bank. First Bank is a little bit up now, up by about 46 basis points. The stock is trading at 11 Naira now. Right now, the market stock is trading at 11 Naira. Other names on the gainer side are Fidelity up by 3.27%. GT is up by 2.44%. So those are some of the big names on the gainers chart that are putting the market on a positive trajectory this afternoon.
So do we see this trend continuing to the close of trade, or do you see a pullback before the close of trade today, especially when we look at the banking counter?
So the gain is marginal, and it can be turned around to negative territory. But investors are very cautious in terms of their stock picking now. So we can never tell. The gain is so marginal, and just any sell down in any of the large cap might just bring the market to a negative territory. But as of now, we are still seeing these positive figures.
All right, so certainly hope that it continues to the close of trade. Thank you so much, Richard Akimoladu, equity trader with CSL Stockbrokers. All right, let's move on now to Europe, where Europe has been watching that visit by Xi Jinping to Moscow with special interest. As is expected, the trade relationship between the two countries has grown in importance since the beginning of the war in Ukraine. But there's Is there any turning back? We have Stephen Bursley now, who is joining us from Berlin to give us details of conversations around this. Hi, Stephen. Good afternoon. Well, Xi ended his visit with warm words. What do Europeans see in this China-Russia relationship when it comes to trade?
I think there's a lot of interest from the European perspective in what's going on between the two nations when it comes to trade, especially when it comes to commodities such as oil and gas. Remember that Russia has shut off many of those commodity flows to Europe, and that Europe, conversely, has prohibited a lot of those inflows as a result of the war in Ukraine. So Europeans are curious where that's going to go and if Russia can build out those exports to China as fast as it has suggested. Now, otherwise, there's a lot of interest in any kind of trade that involves the war in Ukraine. And the first thing would be lethal weapons going from China to Russia. That would be a red line for the West. But more recently, we've seen a lot of growth in the amounts of dual use goods going between the two nations. And by that, I mean items that have both a military use and a civilian use. I think of helicopter parts, radar parts, and also semiconductor chips. That's been greeted with criticism from the West and the suggestion that there could be more sanctions coming. And as a result of that, I think that there's a concern here that you're going to see more and more divergence between two of the world's largest economies in the U.S. and China, and that, of course, has an effect on the entire global economy, including businesses here in Europe.
So 1 year into the war, can we say that the trade relationship between EU and Russia is dead?
No, certainly not. In fact, there are still oil exports from Russia into European countries, including Hungary and Slovakia, which were exempted from oil bans otherwise that were put in place by the EU, bans on Russian oil, I should say seaborne Russian oil. There's also Russian natural gas that continues to flow into Europe, albeit at very low levels. And there is still trade in some non sanctioned goods. The fact of the matter is that all of this trade is at a much lower level than it was before, which is why Russia needs to find new trade partners to replace what it's lost with Europe, and conversely, why Europe needs to find new sources of energy to replace what it's lost with Russia. If you look at new numbers released from Germany, for example, in February, trade with Russia fell 60% from the prior year. That means that Russia became the 14th most important trade partner for Germany outside of the EU. Before the war, it was the fifth most important trade partner. So that gives you an idea of just how much it's fallen and how much trade has fallen between the EU and Germany.
With the markets there, how's that looking now at this time?
I think what we're seeing today is that there's a lot of concern, a lot of anticipation about what's coming from the US Federal Reserve. A lot of people are expecting an interest rate hike of a quarter point. That's probably baked into a lot of what we're seeing today already. And if there's any kind of surprise, if there's a higher hike, or if there's no hike, then I think you'll see markets react. We know that over the past 2 days, we've seen markets rebounding a bit from some of those fears over the banking crisis. And so there will be questions of whether that will continue after the US Fed comes out with its decision later today. Markets in Europe starting off in negative territory, light negative territory, perhaps being pushed down in part by new inflation figures out of the UK showing a surprising jump in the rate of price increases in February. I think that's caught everyone by a little bit of surprise. But most eyes right now are going to be on the US Federal Reserve.
Yeah, obviously all eyes are there, Stephen. Thank you so much for that. All right, let's move straight to the UK, where inflation tops conversation there. But we have Juliana joining us. Juliana, good afternoon. Good to see you after our election. I missed you. I don't know if you missed it, but we open on inflation up now, 10.04. And veg shortages is contributing to this. Where are the farmers?
That's absolutely right. I always miss speaking with you, Innie. Thanks for having me back. Yes, as we were just hearing from our colleague, we've had some shocking data from the UK just after we had that sigh of relief from the Chancellor Jeremy Hunt last week during his spring budget announcement, saying that the peak of inflation was over and that it could reach 2.9% by the end of the year. And then we got this inflation by the Office for National Statistics today showing that CPI has reached 10.4% in the month of February. And this is a huge increase from the 10.1% it was at in January. Now, lots of economists scratching their heads, where has this come from? Mainly alcohol. So anybody who loves a drink would see that prices have been rising. That's put up the upward pressure. And also there were some shortages because of logistical issues and traveling from mainland into the United Kingdom of salad. Anybody who loves a cucumber and a tomato would have seen you couldn't get it. Prices were going up. That's pushed up inflation. But this is obviously significant because tomorrow, about this time, we are going to be having an update from Andrew Bailey, the Bank of England governor, because, of course, the Monetary Policy Committee meet tomorrow. Now, so much has been happening with the banking crisis, not only the collapse of SVB, but then also we had that forced sale, didn't we, of Credit Suisse by UBS. And the mood music in the room was that interest rates should remain the same because, of course, it's because of the cost of borrowing that's pushed down the bond prices, which is pushing these banks on the edge. But that's not going to be the case anymore. I think the Bank of England are going to be under significant pressure and are likely to take a cue from what we saw at the ECB last week and Christine Lagarde basically, shutting off their eyes and ears to what was happening around the west of the world, and they pushed up their interest rates. So we are expecting for there to be at least a quarter of a point tomorrow, which would push it up to 4.25%. Not great for anybody who's borrowing, anybody with a car loan, anybody on a tracker on their mortgage. They are going to be unfortunately seeing their prices rise month on month. But of course, we know the Bank of England have said their main priority is pushing down inflation. And now that we've seen that shock rise, expect interest rates to be hiked tomorrow.
Yeah, well, another person under pressure is Rishi Sunak is to face the Prime Minister's questions. And it's a Brexit deal again.
You're absolutely right. PMQ is currently ongoing at the moment, focused predominantly on this new report we've had about the failings of the Metropolitan Police, which is really significant. Racism, misogynism, sexism, everything is going on with the British police at the moment. I suppose most people won't be surprised to hear that. So that's what the discussion is. But then shortly after, we are going to be having this vote on Brexit. Yes, the vote was in 2016, whether we should leave or not. We are still trying to make it work. That just goes to show just how dreadful the situation is. And I think all sides will agree on that. There is pressure on Rishi Sunak, but the main person in the spotlight today is going to be who has become his arch nemesis, Boris Johnson, the former Prime Minister, who has publicly declared today, alongside Liz Truss, Rishi Sunak's predecessor, Priti Patel, the former Home Secretary, significant backbenchers, that they are not going to back this Brexit vote. I will have to try and quickly remind, because I know we've got to go to the break soon, but the Northern Ireland Protocol, which was the line in the middle of the Irish Sea, that was arranged by Boris Johnson. Rishi Sunak ripped that up and he created the Windsor Framework a couple of weeks ago, which would basically give Northern Ireland, the north of the island of Ireland, which is part of the United Kingdom, an opportunity to work with the EU and change the rules of the protocol. Northern Ireland Parliament is not sitting. That cannot happen. Northern Ireland are not going to back this Windsor Framework. Boris Johnson and his allies not happy. They're not going to back it. It is going to pass, this Windsor Framework, because it's got the backing of Sir Keir Starmer, the Labour Party. But this is not a great look for Rishi Sunak, who's already trying to go toe-to-toe with Boris Johnson, which is difficult because he is the establishment and it's difficult to go against him. But then another big story is going to be that Boris Johnson is facing a 4-hour grilling today, live, from the Privileges Committee about whether or not he misled Parliament, which led to him getting that fine from the police. There's a lot going on in Britain at the moment. Police top it, then Brexit, then Boris Johnson. Then, of course, we've got the beleaguered economy. So, yes, Rishi Sunak, certainly a man under fire and on the ropes at the moment.
Well, Juliana, I can say I'm glad you didn't mention strike and all of that, even though we know it's somewhere, somewhere behind. But I mean, let's just have the markets quickly, because as you said, it's time for break.
Let's have the markets quickly. Yes, the all share is down 0.16%. All of this is inflation related. FTSE 100 down to at 0.08%. The FTSE 250 down by 0.38%. All the gains lost in the currencies market. The British pound trading up against the US dollar, though, by over 0.5%. Trading up against the euro too by 0.34%. And the British pound at intraday is trading up against the Japanese yen by 0.87%.
Thank you, Juliana, as fast as you could do it. I'll send you the dress memo for tomorrow also, so we'll do it again.
Let's do it.
All right. Thank you so much, Juliana. Let's head to break now. When we come back, we'll stay on the African continent. This is Business Incorporated on Channels Television. Let's just do a little bit of markets in the United States before we head to Africa. Still here on Business Incorporated, and we can tell you that stock futures were slightly lower on Wednesday as investors braced for the Federal Reserve's next move in the inflation fighting rate hiking plan. Features tied to the Dow Jones. Look at there, the number, it's in the green, almost 1%. Good market for features, 0.98%. S&P 500, 1.30%. And then the highly tech stocks of NASDAQ is 1.58% at 11,860. Let's head home. In Africa, the government has awarded civil servants a 100% salary increment as part of its commitment to improve the welfare of its workers in Zimbabwe. Part of the package includes a review of the COVID-19 allowance, which went up from $200 to $250 for all civil servants, excluding those in the health sector. Finance and Economic Development Ministry Permanent Secretary says all teachers have been given an additional $80 monthly teaching allowance. So it's good news for workers in Zimbabwe. In Nigeria, the digital currency is seeing its fortunes rived by the country's demonetization policy that has left many citizens scrambling for alternative payment channels. The value of e-Naira transaction was up 63% to 22 billion naira. That's about $47.7 million since its introduction, while the number of wallets jumped by more than 12 times to 13 million when compared with the data in October. And all this data is according to the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele. As we know, there was that MPC meeting yesterday, and he gave this announcement at the close of that meeting. Now, World Bank has approved a new country partnership framework for Egypt for the financial years 2023 to 2027, providing the country with $7 billion in funds. And the CPF will entail 1 billion naira per year from the International Bank for reconstruction and development, and about $2 billion during the entire CPF period from the International Finance Corporation, that's the IFC. And adding that the program is meant to support Egypt's efforts in green and inclusive development. We stay in Egypt, where the government is trying to counter high demand for US dollar via new sources of foreign currency. One of those efforts is establishing a company for Egyptians experts to invest their savings in various economic activities in the local market. This aims to achieve a high return for them and increase direct investment. The Egyptian government is also working to save the US dollar by completing the steps of commercial dealings with Russia in local currencies and expanding that to include China and India. According to a statement by the immigration minister, a deal was made to establish a joint stock company for Egyptians abroad, including major investors, and responded to a request to participate in the establishment or small investors who wish to preserve and develop their savings. The chairman of the Plan and Budget Committee in the Egyptian Parliament said that the aim of establishing the Egyptians Experts Investment Company is to provide an opportunity for residents abroad or Egyptians with other nationalities whose numbers range between 12 and 14 million worldwide to subscribe to the company to develop their savings and still be linked to their home country. From Egypt, the UK State Development Finance Constitution, British International Investment, BII, has announced that it is committing 20 million euro to the Meridian Group's TOF, that's the Urban Resilience Fund, which is dedicated to projects in Sub-Saharan Africa. Meridian is an independent investment, public benefits, and asset management group focused on the development, financing, and long-term management of sustainable public mobility, public services, and low-carbon infrastructure. It is based in Paris, France, hence the UK commitment is in euros and not in sterling. TOF is focused on funding and supporting the design of climate-focused urban infrastructure in sub-Saharan Africa countries. It seeks to make African urban public infrastructure more affordable and reliable while improving safety and ensuring climate resilience. And in Uganda, the country's trade minister, Harriet Ntabazi, tells the Africa Report that her country will soon ink a trade agreement with Algeria for various products, which will country. This comes as Kenya seems to be reluctant to import milk from its neighboring country. For more than 3 years, Uganda has been looking to export milk to Algeria. Hopes now hinge on the talks that follow the president's trip to Algeria from 11th to 13th of March, during which Uganda milk export. And just before we go on the program, let's see what's happening in the global oil space. And we can tell you that oil prices slipped today after 2 straight days of gains. As an industry report showed, U.S. crude inventories rose unexpectedly last week in a sign demand may be weakening. Brent futures, which have risen more than 2% this week, were down 58 cents. That's about 0.8% at $74.74 a barrel. U.S. West Texas Intermediate crude futures went down 59 cents, which is 0.85% to $69.08. Data from the American Petroleum Institute shows that U.S. crude inventories rose by about 3.3 million barrels in the week ended March 17th. Traders and analysts will be looking out for data from the U.S. Energy Information Administration to see whether it confirms signs of weaker crude demand. That's the much we can take on Business Incorporated today. Thank you so much for being a part of it. We'll do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.